Welcome to This Explainer. Today, we're going to thoroughly evaluate a high-stakes tightrope walk. We are looking at Oncolytics Biotech, a clinical-stage company where massive medical breakthroughs are racing against a ticking financial clock. We'll be weighing the current cash runway risks against the immense growth potential for investors.
So let's just dive right into the core tension here. Can groundbreaking clinical trials outpace a ticking financial clock? That right there is the ultimate biotech investor's dilemma, and it's the central question we'll be exploring throughout our analysis today. Here's a quick look at our agenda for today's explainer. We'll start with the biotech investor's dilemma, look at unlocking the immune system, and review the clinical data and growth potential. Then we'll pivot to the cash runway problem, analyst ratings and dilution, and finally, weighing risk against reward. Section 1. The biotech investor's dilemma. Balancing medical miracles and capital burn. Early-stage biotech investing is honestly like walking a tightrope without a net. You've got to constantly weigh the immense upside of a promising drug pipeline against the harsh, everyday reality of burning through cash before ever reaching commercialization. As financial analysts tracking the sector will tell you, even if a business is bleeding money today, shareholders can profit massively down the road if the underlying asset is strong and eventually hits the market. But the flip side, many loss-making companies burn through all their cash and go bankrupt before they ever get the chance to save a single life. So you have the potential of a multi-billion-dollar addressable market on one hand, but the very real threat of depleting capital on the other. Let's look at the science. Section 2. Unlocking the immune system. The science of pelareorep. So how does their flagship therapy, pelareorep, actually work? It happens in 4 really fascinating steps. First, it's delivered intravenously, and it essentially hides from the immune system by hitching a ride on cells right in the bloodstream to reach the tumor. Second, it acts kind of like a heat-seeking missile, selectively infecting cancer cells that have specific RAS mutations. Third, as it replicates inside, it produces double-stranded RNA, causing those cancer cells to literally burst open. And finally, that bursting sets off a massive alarm bell for the body's immune system, effectively turning stubborn, treatment-resistant cold tumors hot. Section 3. Clinical data and growth potential. The medical efficacy signal. The crucial point here is whether this incredible science actually translates into real-world patient outcomes. Well, looking at the REO-22 trial for metastatic colorectal cancer, pelareorep combined with the standard of care absolutely crushed the standard of care alone. I mean, look at this. Median overall survival was pushed from 11.2 months to a staggering 27 months. Median progression-free survival nearly tripled from 5.7 months to 16.6 months, and the objective response rate jumped from 10% all the way to 33%. In a patient population historically resistant to immune-based interventions, these are literally practice-changing metrics.
And that strong efficacy brilliantly illustrates why the FDA recently granted them Fast Track Designation for specific hard-to-treat forms of metastatic colorectal cancer. We're talking about a total addressable market estimated between $3 and $5 billion annually. Because of these strong signals, Oncolytics launched a randomized phase 2 trial called REO-333, specifically designed to confirm these numbers. And we're expecting preliminary data from that by late 2026. Plus, they're seeing similarly amazing data from their BRACELET-1 breast cancer trials, where conservative estimates of median overall survival for the pelareorep arm hit 32.1 months, compared to just 18.2 months for the control group.
As CEO Jared Cowley rightly points out, they are quite literally doubling or tripling critical clinical endpoints in historically resistant, massive cancer markets. The medical potential is just undeniable. But let's flip over to the balance sheet, because this builds a completely different kind of tension. Section 4, the cash runway problem, the ticking financial clock. As of June 2025, Oncolytics Biotech was staring down an estimated cash runway of just 7 months. Yep. 7 months. That creates an incredibly serious race against time for the company and its investors. When we look at the Simply Wall Street data, the deficit is crystal clear. They've got 15 million Canadian dollars in the bank, but a $25 million annual cash burn. The financial clock is ticking loudly. Now, it's definitely a positive that the company is operating with zero debt, but analysts forecast that Oncolytics is still about 3 years away from breaking even on a free cash flow level. That means they have to find a way to bridge a multi-year gap to actually get to the finish line.
And management is being very upfront about this. Reporting objectively on their Q3 2025 filings, they explicitly noted that these financial realities raise substantial doubt on our ability to continue as a going concern. They estimate they can only fund operations into March 2026 without a new infusion of cash. This is the stark reality of the biotech tightrope. Despite the medical breakthroughs, the company simply cannot survive in its current form without new capital.
Section 5. Analyst Ratings and Dilution. Sizing up Wall Street's expectations.
So how does Wall Street reconcile these scientific leaps with the depleting capital? Well, despite the acute financial risks, analyst targets track massive upside expectations. According to Benzinga, across 8 analysts, the average price target is $5.43. When you compare that against a recent trading price of around 84 cents, that represents an implied upside of over 970%. Even the lowest analyst target of $3 represents significant multi-bagger potential. Wall Street clearly believes in the science of pelareorep.
But here's the catch. To keep the lights on until the end of 2026 to see those crucial Phase 2 trial results, Oncolytics will almost certainly need to issue new shares to raise capital, and that leads to inevitable shareholder dilution. For those unfamiliar, dilution is just a reduction in your ownership percentage of a stock caused by the issuance of new shares. It's the standard survival mechanism for early-stage biotech companies, but it still stings for current holders.
There is a bit of a silver lining found in the financial data, though. Because their annual cash burn of 25 million Canadian dollars is only 17% of their $144 million market capitalization, financial analysts suggest the company could likely raise more cash for growth without too much trouble. Essentially, the market cap is large enough to absorb a capital raise, albeit at the cost of diluting current investors. It's a bitter pill, but one that keeps those critical clinical trials alive.
Let's pull all of this together. Section 6. Weighing risk against reward. The final verdict.
What you should really take away from this explainer is a picture of undeniable FDA-validated medical efficacy that could quite literally change oncology. Doubling and tripling survival rates in multi-billion-dollar addressable markets is absolutely huge. But this incredible potential is strictly counterbalanced by severe, short-term capital constraints. With funding only guaranteed into March 2026, there is an incredibly high likelihood of imminent shareholder dilution.
Which leaves us with one final pretty provocative thought to consider as you evaluate this space. Is the groundbreaking science of pelareorep strong enough to survive the harsh, immediate realities of the balance sheet? Well, that's a question every biotech investor has to answer for themselves. Thank you so much for joining me for this explainer, and keep learning.